left, I can close. So if you want to contact us at Chan Naylor, certainly our website. There's a national telephone number. So the website www.chan-naylor.com.au, or the telephone number 1300 250 122. Or more importantly, if you log on to that website, then you can ask a free 5-minute question that we can then answer you. So with that, happy investing and good luck to everybody in this upcoming year end.
Terrific, Ken. Thank you for that. A great presentation, which has sparked some great questions too. We'll jump into them. Melanie's got a question about rental property that she's let out as a holiday house for the first time. She's just wanting to know if there's any tax issues she needs to be aware of, or do the same sort of laws apply or rules apply to holiday rentals as they do for an ordinary rental.
Yeah, ordinary rentals. It just becomes an investment property, so the debt at that time is then deductible, and any expenses are deductible. But what is very interesting is if you had that property as a holiday home that you were using periodically, you're allowed to accumulate all the costs of holding on to that property. The interest expense while you had a loan, repairs and maintenance, council rates, and if you ever sell that property, you can add all those costs over time to reduce the profit that you'll pay tax. So we actually add them to the cost of the property to now get a very high cost to then determine whether I've made a profit on sale. So if you've switched from it just being a normal holiday home for yourself, make sure you've captured all those expenses, and then from the time you're actually putting tenants in there, it just takes on the norm.
Ken, does that remain the case if say you're letting it out for, I don't know, 6 months of the year and living in it for the other 6?
Correct. So for those 6 months where it's a personal use asset of yours, then gather the paperwork.
Yeah, fair
and
enough.
You need to be very diligent. Treat it as a rental property even though you're using it, because in 20 years time, can I tell you, it's going to be very hard to determine what did I spend over the last 20 years. The taxman wants to see proper documentation.
Yeah, fair enough too. A couple of questions about the scrapping schedule, Ken.
Yeah.
If you are doing improvements, not inside super, just general improvements, does that sort of scrapping schedule advice still hold? And
100%.
Can you do your own scrapping schedule, or it does need to be done by an expert like a quantity surveyor?
No. Yeah. Can't do it yourself, the same as you can't do your own depreciation schedule. Not even your accountant can do your depreciation schedule. They've got to be suitably qualified and registered with the ATO, and it's normally quantity surveyors. You know, architects obviously can do it, but they tend to be a bit more expensive. So quantity surveyors, and they'll do the depreciation schedule as well as the scrapping schedule. And look, can I say, for people who are buying properties with the aim to bulldoze and rebuild, you know, you can take that scrapping schedule one level higher to a demolition schedule, you know, because I've demolished the whole building. But again, it'll be the quantity surveyor. Fair
enough. Question from Dale: can a super fund borrow to construct a property, not just buy one?
No. The short answer is no. There's what they call a single acquirable asset, you know, in case you do some reading. The asset you buy is the asset you have to have. So if you bought a block of land, you know, with cash, you then can't go and borrow to build, because the first asset you bought was the land. That's all you can do. Or if you bought a property with a house that you then bulldoze, you know, it's a different asset at the end of the day. So you've got to be very careful with that. What we're saying with the renovations, as long as they're the minor cosmetic, you know, the kitchen, the bathroom, that's not seen as a change to the underlying asset. It's still a 3-bedroom property, you know, it's just got the newer kitchen. But you couldn't knock out a wall to increase the size of the kitchen by, you know, 50% sort of thing. Fix up what you've got.
Thanks,
and
Ken.
again, with the renovation using cash, not borrowed money.
Okay. Okay, another SMSF question. I'm not sure what the answer to this one is. Can your SMSF buy a property then rent it back to you?
I'd be cautious and say no. Certainly be, you know, before age 60, categorically no. You know, the sole purpose of a super fund is to create retirement income for you. There's actually that sole purpose test. So, you know, even if you bought a, you know, nice bottle of wine, you know, they tell me Grange is nice, you know, you shouldn't keep that at home, or the painting at home where you get personal enjoyment of it. So I'd stay away from that.
Yeah, fair enough. Fair enough. A good question from Rosalind here.
Sorry, when I said that, we're talking of a rental property, residential property, but if your super fund bought a commercial property, a business property, it could rent it to you to run your business in.
Okay, so there is an important distinction there.
Yes.
Yeah, okay. I think Melanie was asking more about residential, so that's a good answer. Good question from Rosalind here. Do most people end up with 2 accountants, a sort of property expert and, you know, a normal accountant, for want of a better term?
Well, what we find is one of 2 things. People either bite the bullet and they say, I need specialist advice, and then they just come over and they only have 1 accountant. We see in some instances people have 2 for various reasons, you know, friendship, historical, etc., etc. But we find that, you know, they quickly move over once they see the benefit, and can I say probably some cost savings as well by having it all under one.
Yep. Okay. Good. We've had a couple of questions, one from Ling and one from Ramesh, about when you need to register for GST as a developer. Can you give us some guidance there?
Okay. So again, GST is if I'm going to be in business, you know, in small terms, and you certainly have to register for GST if that business income is going to be over 75,000. So one property, it's the sale price, not the profit. So you should register for GST very quickly, certainly at the beginning. Excuse that cough. Buying land or a commercial building or something where you're going to have to do a GST entry at the beginning, and depending on whether you want to be part of what they call a margin scheme or whatever, which is the sole discretion of the vendor. But I'd be registering straight away. If for whatever reason you haven't, then you can always go back and register and backdate it, and if there's any GST credits due to you, whatever, you just do amended BAS returns. Okay.
Hope that helps you out, Ling and Ramesh. Question from Michael, and I hope I'm following this right. His owner-occupied property's been rented for 6 years, and he's asking about the 6-year rule around CGT, Ken. Can you enlighten us there?
Yeah. So you're allowed to move out of your principal place of residence for up to 6 years without losing the tax benefit of the main residence status. So you can obviously move back in, you know, just shy of 6 years, and you know, for 6 months or whatever, and then move out again, and you're allowed to do that, and then that would extend give you a second 6-year period. Now, what the onus is on the taxpayer to tell the ATO which property they want to use as the main residence.
Right.
So if you moved out of your house and bought another one, then you only have to tell the ATO when you sell one of them which one you want to claim as the main residence. So, you know, taxpayers normally do the calculation of which one gave me the better capital gain. The other thing, of course, is you've just got to be careful on when you sell the main residence. It's normally tax-free, of course, but had for whatever reason you didn't move in straight away. So maybe you bought a rental property where there was still a 6-month lease and therefore you couldn't move in straight away. The ATO would say that first 6 months you have to apportion to the total time you held the property, and that small amount would be taxable. Versus I moved in day one, and then it's a lot easier to get the whole amount tax-free. So you need to understand whether you moved in at the very beginning or not. And it's not, I wasn't allowed to because there was a tenant there. That's just tough luck. Obviously, if you had an accident, you're in hospital, that benefit. But if you've got a tenant in there, you've got to then apportion it the amount of time you had a tenant versus the amount of time you were in it.
Terrific. That's fantastic, Ken. Thank you very much for your help today. I know you've really helped some people out there, and if you do have any further questions, chan-naylor.com.au, well worth getting in touch with Chan and Naylor and getting some further help. Okay, as we exit today's webinar, I'd just like to